So we did get a failure of the bear flag and a little bit of support in the historic range down at like 52.20, like 52.30. This range had a little bit of support previously on ES. I don't think it's a very important support level, like maybe minor support at 52.35. The one that really matters is down here at 52.16. A break of that is our bear confirm, right? That means we're gonna push into that trend, retest the trend, and then maybe start to push for like our lows from like late mid-April. Right. Once this upside trend breaks, and I mean, really, if you go out on the daily, right, this is not the most bullish pattern, right? Like we did have a break to new highs, but it was really weak, and now we're falling like back into the prior bear flag, right? So, a loss of this could be really bad, right? It's the whole new normal thing, right? But things were never the same after we corrected, despite them appearing to be. We moved into the low range of the market maker's expected move for today, closing about $5 above it, and we did have a brief period below it, but not very long. We also closed, and this is probably far more important than anything else. We closed below delta neutral, so that means if price drops or volatility rises in after hours, after today's move, we could potentially see a continuation tomorrow at market open, when the has to deleverage. Below DN and above VIX 14. Yeah, but this is the monthly DN. It's not the weekly DN, not the monthly. It's not nearly as important as this level is. But it is somewhat important. And this will have also moved up probably around that 45 level that we struggled so hard with earlier. So we'll keep an eye on all of that. Commodities dropping with indexes. That's not too abnormal. But a failure of the bullish consolidation here. And that leaves like a double gap to the upside at 104.60 something. Yields trending down today quite a bit, which is surprising. I guess, a little bit of post-coitus recovery there from the from the GDP print, right? Bond market priced in more risk than they needed to yesterday, but oddly, dollar down on stronger growth, and yields down pretty much, not down a lot compared to the last few days increase, but down more than you'd expect them to be. And, probably some of that is vol shorting on the other side. We got a little bit of a flattening out in correlation day over day. Same on the 3 months. So vol's still getting shorted hard, even at these levels. We had a big dump in the leverage on USD JPY carry. That's that like synthetic swap, right? And that's coming alongside with vol spiking, right? And us finally getting back above that positive volatility convexity, right? So this is still getting pressured even as we go into after hours here. If we do see more inversion of the yield curve, that's going to get pressured quite a lot. One of the reasons vol isn't flying off the hook right now is because, yen's up against the dollar a little bit, and some of those conditions eased after the GDP report. But the demand is still pretty high, even with the easing that's occurred, because it's not very much. Bond vol is still moving up, and we're getting more realized volatility in bonds. They're making bigger moves. Skew didn't really change much day over day, kind of flattening out here. We did see some tail risk interest pick up yesterday. Maybe we'll see some more today. This will print again at 415. 24% of the S&P below its 20-day moving average, and even though that's the case, we're not even down like 150 BPS. Like, we're barely at a 1 sigma move. Now, you guys saw I posted like the CTA analysis last night from Goldman, and when we hit that 1 standard deviation move, the systemic sellers are going to come in at about 20, like gonna risk off at about 20 billion. But there's also vol control on the other side of that. That's not another 20 billion on like VIX 15 to 16. And so that's about 40 billion. And then if we hit a 2 standard deviation downside move, systemic funds are going to dump everything they bought on the move up, which is about 160 billion in equities. That's huge. If that happens, it's going to get really, really spicy. So keep an eye on that. Vol control really, really leveraging up today. We saw that with correlation. We're seeing it here with the correlation indexes. We're seeing it here with VIX, cash VIX futures correlation moving up a little bit. We were at negative 36% yesterday, negative 39% today. So they're really, really trying very hard to get a handle on volatility here. And I think that's largely due to the massive amount of concentrated short put risk between like 5250 and 5100. Remember that these were all the puts that mooned us, right? So when we go back and we look at this big bounce, right, we're starting to fall into the range where that bounce started and where all of these short puts built up. These are not yet expired, right? Like not enough time has passed. So there is just a metric ton of short puts in this range, right, that have been sold and present a great deal of risk. So keep an eye on that. I mean, as we fall, that those big concentrations. When I show you guys the net gamma on all expirations, look at where those concentrations of puts are, because you can understand where that positioning will squeeze off to as those puts go in the money and the market maker dumps the hedge on them. Okay, so I know most people just focus on like the 0 DTE gamma structure, but take a look at that Vega risk and stuff as well. And yeah, Fute's still dropping, so it doesn't look like things are getting more bullish, right? This is probably very, very bad, but we'll see. Yeah, obviously there's still an opportunity for bulls to turn this around before we fall below delta neutral and start to get like a massive correction. Dell down 11% in after hours. Ouch. A bunch of people wanted to go long that because it's been ripping on the AI speculation. All right. Anyway, thank you guys so much. Sorry I couldn't spend all day with you, but I hope you all did well on those last few plays. They were good ones. I will have Pickles Picks out tonight. I'll try to get some 0 DTs written up for tomorrow. And have a great night, everybody. I'll see you later.